Yeah, so China markets are actually going to be driven a lot by where the macro situation is right now. If you do recall, there was a sell-off when China reported lower than expected Q2 GDP print.
Yep.
But we expect actually some form of a turnaround in the second half. We expect a replay of what we see in last year, where we had a strong Q1 print, a soft Q2 print, and a rebound. So we actually expect to see some form of a rebound towards the end of the
H2 rebound assumes the government does what, though?
So we're going to look for a few things from either the plenum or the Politburo. So the plenum focuses a lot more on what the structural issues are. So where disinflation is heading, where consumption is heading. So we're going to look if there are going to be changes in that strategy towards addressing it. And then on the Politburo is more what they can do in terms of policies. Are they going to front load a bit more of government spending, the government bond issuances, or maybe the PBOC may come in with additional cuts. So we need a combination of both to be able to help that with growth on the end.
So I think some people would agree that it's probably the Politburo which is going to be more important than the plenum, which is underway right now, simply because the plenum is likely to be more about governance than actual policy initiatives. So wait and see what happens with the Politburo. Do you think, though, actual concrete steps are going to be supercharged because policymakers in China are looking at what's happening in the U.S. and going, uh-oh, looks like this guy's going to come back. This is Trump, right? And she was talking about this, and I think he broke it yesterday morning, right? It's not just up to 60% tariffs on China. It's between 60 to 100% tariffs on China. I mean, the Chinese are certainly paying attention to that.
Yes, definitely. But as we've seen in 2018, 2019, where the trade conflict increased, China's response has always been a bit more measured, tit-for-tat, a bit more, rather than an all-out. So in terms of, instead of rolling out something bazooka-like at the start, they'll probably wait to see eventually who's going to be in power. They'll probably wait to see what will actually be introduced before they do something ahead. Base case is because of the quarter-on-quarter effects of the downdraft in the second quarter in terms of growth, we do expect a natural uplift in growth naturally. So we think that will already support where markets are. And then secondly, they will have to do some stimulus to help, but we don't think it's going to be a big bazooka one yet. You don't want to show all your cards yet before
Some of it, most of it is going to be low base effect.
Yes, there will be a lower base effect, definitely. There will also be what they have already scheduled in terms of government bond issuances, which they have yet to utilize, so they can potentially utilize. So that will definitely lift it up.